Well, Danielle DiMartino is Chief Executive Officer and Chief Strategist at QI Research. Danielle, great to have you with us here. Good morning. Thanks very much for your time. Prashant this side. For the time being, here in India, we're very much focused on the local general elections, the big elections which are underway, and we'll get the verdict in 2 weeks' time. But there is already a lot happening out there in the US. Of course, I mean, there is this debate about the Fed rate trajectory, etc. But even with 6 elections in the US 6 months away, we are starting to hear a lot of tariff talk, tit for tat, EVs, green energy, our exports out of China being tariffed at a higher rate, etc. What's the risk environment looking like, Danielle, from a global perspective?
Well, it certainly seems, and again, thank you for having me on your show. Very much appreciated. But it certainly seems like there is more focus on tariffs, and it's very much bipartisan in nature, which is saying something given how divided the voters in the United States are right now. But they've certainly galvanized and come together on this one subject of tariffs, which appear to be coming out of the Biden administration, and we know would be amplified and elevated if Trump was to be reelected come November. And by the way, the more we get talk about this, about tariffs and nearshoring, if you will, the election that follows your June the 1st conclusion actually is June the 2nd. To the south of our border in Mexico, a very important one for drawing trade relationships and what have you, a good commodities partner as well.
Okay. Thanks a lot for joining us. It's a pleasure, Danielle, speaking to you this morning. I wanted your thoughts on whether you track the Indian economy in any way, because, there is a bit of an inflation dilemma that the RBI has over here. The RBI governor has made it very clear to those who are waiting for rate cuts that they might have to wait a little longer. Your own thoughts on which way the central bank in India would head over, say the next 12 to 18 months, if you track it?
So I would anticipate that in India, you would be seeing a rate cut as soon as August, even if the Federal Reserve here in the United States decides to wait possibly until the September meeting to get verification that the increase in the unemployment rate is going to be sticking. But I actually have studied your economy, and I do anticipate that the central bank there could possibly, again, jump in front of the Federal Reserve, especially depending on what other central banks do around the world. There's a consensus that's gelling around the European Central Bank coming off the starting block quicker and starting to lower rates sooner than the Federal Reserve, which is, of course, waiting for the unemployment rate to cross certain thresholds here in the United States, which we see coming, by the way, as the second largest economy in the world. China continues its slowdown.
Hi, Danielle. Good morning. Nigel on this side, and good to see you on the show. We have the CPI and the PPI data as well in the next couple of days, so that'll give some clarity with regard to the Fed's trajectory. But I believe that you're in the camp that believes that we can still see multiple rate cuts coming in from the Fed. How many, and what's the quantum you're factoring in for this year?
So I think part of what's driving my thinking is that we've kind of moved away from seasonality. We've moved away from seasonal norms in the United States. We wouldn't normally be seeing companies being as aggressive in their job cut announcements as we're seeing. We just had a large restaurant chain here in the United States abruptly close 80 restaurants, affecting 6,500 employees today. We've had Walmart come out with announcements that it's going to be shedding executives, white-collar workers at its headquarters, bringing everybody back into the office. And again, these are not seasonally normal patterns that we're seeing in the United States, indicating that we're going to see a faster increase in the unemployment rate. Right now, we've got about 5.3 million Americans who are unemployed and looking for full-time work. And in the state of California, that's where a fifth of them are. 20% of them are in California, which is already in recession. I would remind you that California, if it was to be a standalone economy, is the 4th largest economy in the world. So it's saying something that the largest state in the United States is in recession already. So I do anticipate this is going to spur the Federal Reserve to cut rates 2, if not 3 times in 2024.
Daniel, should we pay any attention to all these stories coming on GameStop? That 75% surge last night. Of course, I mean, the last time we had this frenzy, It was a very different market, but I don't know. I don't know what to make of this. Any thoughts?
It's actually a fairly illiquid time in the U.S. markets as we head into one of our larger beginning of summer holidays of Memorial Day. So in my Bloomberg chat room today, for example, a lot of the institutional investors were saying, what a gift on a very quiet, low liquidity day that we have this coming out of the woodworks. How very exciting that we've got a meme stock that's come back to life. If nothing else, it's given us something to talk about.
It has, definitely. Some excitement there, right? Danielle, always a pleasure speaking to you. And hopefully we'll see you more often on our channel. Thank you for stopping by.
And thank you for having me.
Okay, well, that was a word on the global market.